The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
With us today is financial advisor Katherine Perez. Welcome, Katherine. Great to have you on the show.
It's great to be here, thanks.
We're going to talk about what are the common mistakes the high-income affluent investors make.
Yeah.
But before we get there, tell me a little bit about your background. How did you get into finance?
Well, I think it was the movies that actually got me interested in the stock market. And I think it was a movie with Michael J. Fox in it many years ago. So at the age of 11, at grade 6, I took out a book on stock market investing out of the library. Opened it, didn't understand a word, closed it, and it was kind of a latent interest all this time. And fast forward 20 years later, I found an opportunity to work in the business, and here I am.
You know, that's amazing. And even at 11 years of age, to read about, not quite understand it,
right,
but something in you just kept bubbling up, right?
It seemed like this crazy magical world where you can make money. And that just was fascinating to me, and I just had to have a piece of that. Well,
I remember when I first got into the business, I thought stockbrokers were big old guys with their feet on the table, smoking big cigars, buy, sell, you know, high-risk stocks. And maybe that was true?
I saw some of that. The first couple of years, there was a lot of that. It was fun, and it was the time.
Yeah.
And the cliche was it was there for sure.
But I learned quickly that's not what it was about. There were some people who were truly stockbrokers, but what appealed to me, and it sounds like appeals to you, is the full picture, the financial advising side and planning and making good investment decisions.
Strategy, holistic approach, goals-based financial planning, all those things are important to clients and to my practice. And you know, the heyday of stock markets and buys and screaming on the phone and suspenders, that was a movie and early in my career, but
yes,
it's not the case anymore.
No,
yeah,
it's real life
now. It's just, yeah, there was a time and a place for that, I think, in the industry in general, but I think the tempo right now is a little more calm and more measured and more planful.
Well, and everybody likes to make money. Yeah. Everybody likes to spend money. So working with the affluent investor, I mean, a lot of people think, well, it's easy for them. They've got lots of money, but they make mistakes too.
Sure they do, yeah.
Well, first of all, why don't you describe, what do you consider an affluent, high-income affluent investor?
Well, our industry identifies them as sophisticated investors, and they're identified by their liquid investable assets being $1 million or over, or having a singular income of $200,000 or a household income of $300,000 per year.
Okay.
So it's not that unattainable. It seems like it's a lofty definition, but it's a lot more common than you think.
Right. Well, I remember as a kid, wow, somebody's a millionaire. Yeah. Now $1 million isn't as much as it used to be.
It's not what it used to be, yeah.
So what are the big mistakes that you see the affluent make when it comes to investing?
The number one that I see in my practice is they tend to overinvest and have too much of their portfolio in the industries that they work in.
Yes.
So in Calgary, that would be energy and oil and gas.
Yes.
And in reading another article, I think in BC, it happens to be real estate.
Yes.
In Quebec, it's industrials. And in Ontario, it's financials. But in Calgary, I see a lot of bias towards energy investing.
So people with a lot of money putting a lot of their wealth into just one industry, it's a risky thing to do. It's great when it works,
correct,
but what happens when it doesn't?
Yeah, it becomes actually, there's a cycle of denial as well. Like, they know the industry, they know the people, they know the project, they have proximity to the players, so there is a sense, an overconfidence, I think, in being too close to the action, yeah, and you lose sight of the bigger picture, and reality may come a little too late.
And you know what? That's something that all investors can benefit from. Make sure you diversify. Don't put all your eggs in one stock or one basket. Yeah. What about young people who have lots of money? What's a mistake they make?
Sometimes they're too aggressive. So they tend to actually focus on growth and a lot of growth, and they lose sight of volatility. And what I see is that when they win big in the beginning, they want to repeat and compound that experience.
Oh, they get cocky.
Well, they get really confident, and they actually get really excited about it, which is fun to watch, but they need to measure that with the risks they're taking to get there. So when I deal with them and I have these situations, my job is to remind them, rebalance, and protect them from themselves.
Now, do the affluent investors prefer to work with one advisor or several advisors? What do you think?
Early on, they actually like to have multiple advisors. It was actually almost boastful to have 5 or 6 financial advisors. They wanted to pit all the advisors against each other and have some kind of competition, like a race. And I think when you're speculating, it's kind of fun, but after a while, you have to be a little more deliberate and strategic with your investments and with your wealth preservation and creation. And I think it's a disservice when they actually try to have too many advisors, too many chefs in the kitchen.
Okay, so you're thinking that's a mistake by having too many advisors?
Correct, because nobody really knows the big picture. You can't get a proper strategy in place.
And you can't make sure you're executing on that strategy if you're not seeing all the pieces.
Correct, actually, and they'll find eventually that the tactic is very confusing.
And when it comes to performance and rate of return, no one portfolio manager or advisor is going to outperform everybody else all the time. It just doesn't happen. So that strategy of seeing who's going to perform best and then invest with them, well, then the next year this person might have invested better, or that person. So it's playing a dangerous game by the sounds of things.
Correct. Well, anybody can have a good year.
Yes.
And you can get there with a lot of risk and volatility. So I think it's more important to have a good relationship, to have them understand your needs, and be more strategic and planful on how you proceed with your investments. So.
Now, how about chasing return? Do you see that?
Early on, with the young, they tend to pursue what worked last year. So, for example, if gold's on a run, then they have to buy gold. So, I
think you should do the opposite, right?
Well,
generally?
I mean, it all depends,
yes.
But you just can't look at what happened last year and hope for a repeat performance. Sometimes it works, sometimes it doesn't, but you have to have better reasons in looking at what happened last year or what you missed last session.
And is it a mistake for the affluent investors to focus just on rate of return alone?
It sure is, actually. I think the focus needs to be what you need from your money and taking risk-adjusted strategies to get there.
Well, that's great. So I'm hearing a few different things. I'm hearing don't concentrate on one sector. Make sure you're diversified. Be careful not to use too many advisors or your strategy will fall apart. And 3, don't just focus on rate of return alone.
Agreed.
Is there anything else you want to add as some words of wisdom for our...
Well, I'll say that these investors are also very good, hardworking people. So we are talking about all their mistakes and errors, but they need to be protected against themselves. And with all due respect, they do a lot of things right as well. So for those of you that are high net worth and affluent, you do a lot of things right, but some things need a bit more help.
And they got to where they are because of that. Well, Katherine, thanks for being on the show today. Really appreciate having you here.
Thank you, Sybil.
And when we return, how to invest a small inheritance to generate a bigger retirement income.